You see inflation hitting 6% for the month of June. Is this already the peak or is the worst yet to come?
Well, we have yet to see the peak. Actually, it would be, well, at least now, it's not a one-way bet in the sense that we have seen already the risk of recession being priced in by the markets in terms of some downward correction in global commodity. For instance, wheat prices are down to pre-war, meaning before the Russia-Ukraine conflict. They're already at the lowest wheat prices, meaning that's the, well, even indirectly flour, that's already the lowest since February. Same goes with global rice prices. They have gone down already to the lowest in 2.5 months or since April 20. And among other commodities, we have seen even metals like copper, the lowest in more than a year. So even oil, global oil prices already corrected lower, the lowest in about 1.5 months. So there would be some upsetting factors for inflation. We may see the peak somewhere between June to October, but it could be a little over 6%. It won't go far from that because, on local factors, there may still be some lag effects. For instance, the adjustment in local fuel pump prices take about maybe about around 2 weeks or so delayed vis-a-vis the global markets, as we have seen some correction. That's why we're already seeing some rollback. But we have seen that for more than 2 weeks already in the world market. So, at least, we have to balance things out. First, we have the higher wages, at least 6% increase in Metro Manila and in other regions. So that was effective a month ago in early June. So we saw already some upward price adjustments by a lot of companies. There may be some that haven't really raised their prices yet. Then we have seen also the upward adjustment in transport fares, the provisional approval. So effective late last week, that's 2 pesos, from 9 pesos to 11 pesos. That's practically 22% increase in the minimum fares. And and given those two factors, higher wages, higher transport fares, there may still be some second-round inflation effects, as of course the pass on being made by local businesses and producers. But of course that would be mitigated by either competition and of course softer demand as the country is still reeling from.
Sir, on the back of what you just mentioned po, softer demand, is that something that you are anticipating even as the economy has started to rebound? And if so, how would that affect inflation? Is there any demand-driven inflation effect that you're already seeing, or are you seeing that not to really have an impact as prices go high and consumers stop spending?
True, Danny. The economy is reopened towards greater normalcy. Practically no more restrictions. With Alert Level 1 for Metro Manila and more than 80% of localities in the country. And that has been ongoing, at least for Metro Manila, since March. That's or more than 4 months already. So, there may be some pick up in economic activities, business transactions. But definitely, inflation has been largely supply-side driven. So the supply-side factors, these are external or exogenous factors beyond the country's reasonable control, such as the global commodity prices, such as oil. So, and fuel, as reflected on the fuel pump prices of gasoline, diesel, everybody's feeling right now. So, it's largely because of that. The only thing that needs managing, of course, is the second round inflation effects that justify local policy rate hikes. At least we already saw, we already heard signals last week of bigger hike of 50 basis points if necessary, and if it's supported by economic data, and of course partly to also support the exchange rate.
Now, Sir Mike, more to the point that you mentioned earlier, like what you mentioned, we already saw, of course, wage and fare hikes here. But what other second-round effects should we be looking out for?
Well, of course, many other products and services in the economy. Some of them coincided with the increase in wages. And that's one of their justifications. Of course, they need to pass on, maybe for a lot of businesses in industries, because it's something that's beyond the reasonable control of the country. But somewhat they need to pass on to the consumers or the buyers. But of course, that is limited by competition because other competitors may opt not to, because some of them may be more efficient. Some of them may have hedged their supplies better and secured their supplies better at much lower cost. So they could take advantage of that to get market share. But if you look at the whole picture, so given the wide-scale effect of higher global commodity prices to many countries, many businesses, so that's gonna, well, the pass-on cost would still be there, but definitely higher prices would lead to some demand destruction. Well, of course, which are the hard-hit sectors or industries by these high prices of energy. You see how the sharp increase in transport-related businesses. Of course.
So far here, at least domestically, another non-monetary intervention that government is looking into. You have the budget department going to roll out a first tranche of dolouts for the poorest of the poor. That's 6.2 billion pesos for 6 million beneficiaries. Is this going to be enough, sir? And is this something that we should at least be looking at as a staple form of assistance in the near term, at least?
Yeah, true, Jess. This is part of the non-monetary measures, since these are brought about by external risk factors as far as inflation is concerned. So yes, it's somewhat targeted, to make it more efficient in terms of given the scarce resources of the government, the limited funds. We have seen already the country's debt rising to near record high levels lately. So, it just eased month on month for, as of the month of May, because of the repayment of debt. But of course, that remains, those are one of the urgent concerns that need to be addressed by incoming administration. So number one is inflation, second to that is debt. And a way to mitigate the risk of inflation is through the subsidies, especially on the hardest hit sectors. We have seen that beforehand already on the transport sector, the agricultural sector, and now with the poorest of the poor. Also to partly manage, but to also ensure that there won't be any pickup on the poverty rate on the hardest hit sectors. So that's one way. And at the very least also, to prevent the pass-on costs to the general public. So that's one way to do it right now as part of the non-monetary measures, which are, as long as they're targeted, they're more efficient, there won't be any risk of leakages or wastage. So, that's one of the best ways to...
Mabuting
But of
ayuda.
course, it's a delicate balancing act.